Hello, everyone. So let's talk about what happened today. Today, the unemployment figures came out. So unemployment rose from 3.5 last year to 4.3% today. I mean, the past year. What does that mean? Well, it means that the economy is indeed slowing. The economy is slowing. Why do you care? You care because the Fed is hanging on to this rate drop until it sees inflation under control. We don't have the new inflation numbers, but as he keeps that rate high, right, it's slowing down the economy, which he doesn't mind because that's not his job. His job is to protect, like I said, his job is to protect the dollar. He fights inflation first and worry about your job second. So rates are up there and they're telling, bring it down, please, bring it down. We want to make some money here. And he's saying, no, I want to make sure inflation's under control. Okay, but keep in mind that now we're getting hit with the unemployment. And unemployment is going up 3.5 to 4.3. That is an interesting number. What is the news? The news is that the U.S. economy added fewer jobs than expected in July, while the unemployment rate unexpectedly rose to its higher level in 3 years. Hello. We might be in recession, the latest sign of a broader summer slowdown. Now, I did show you in my previous video, the small and large business confidence is a bit low. I told you about Bill Dudley, a former Fed official, that said, I think it's time to lower rates now. So basically, data from the Bureau of Labor Statistics released on Friday showed the labor market added 114,000 non-payroll jobs in July, fewer addition than the 175 expected. Big drop here. We keep talking about it, and that is a problem. That is a problem because you see the U.S. job growth down in July, unemployment rises to 4.3%. The unemployment rate is going up. It's the highest it's been since January of 22nd. January of 2022. Keep saying the same thing. So wage growth, an important measure for gauging inflation pressures, slowed to 3.6% year over year. I mean, the bottom line is, forgetting the numbers, what's happening is the economy is slowing. What does it mean for you as an investor? Well, obviously, we're going to take a hit. Obviously, where are you going to put your money? Well, you got to be careful because we put our money and we put our effort and we put the growth, everything on the S&P 500, which is basically the top 7 stocks. Yesterday, we seen that Intel was like that, Apple was like that, Intel is like that. Be careful because we're banking for lots and lots of growth, and we may not be seeing the lots of growth. So my theory still holds. Let's take a look at some of the more value or small stock. I mean, small stock is okay because they haven't gotten hit yet. And because they were quite low valued, but you got to be careful because you want low growth. I mean, you want small cap stocks, which is great, but at the same time, you don't want to get so small that you get waved and you get taken down with the recession, right? So, I mean, rates are good for small stocks. Rates are very good because it's easier for them to manage. I showed you yesterday in my video what happens to the rate. As the rate is going up, the business confidence for the small stocks wasn't that great. They didn't like it too much, right? Because high rates is not good for small because they rely a lot on financing, right? So what we're doing now is we're going to see what's going to happen, but you probably want to be more with something that hasn't grown much in terms of stocks. Nobody paid attention. Okay, it's small cap, but it's got to be a small cap that is a good small cap. Small cap that's actually doing something. What do I have for you? Well, what we could take a look at is our portfolio. And if we look at our portfolio right now, company EVTC, Evertec, is doing well. Evertec is doing well. It's up 1.77%. Okay. Why do I like Evertec? Well, I like Evertec because if you take a look at the financials, well, if you look at the financials, this company is a small company, obviously, because it's about 700 million in revenue. So we went from 510, 589, 618, 694, and last 12 months is about 740. That's pretty good. If we take a look at the EBITDA, which is basically cash flow, we generate some decent amount of EBITDA. Interest expense is going up, but it's still 46 million out of 224, so we have 5 times. So that's not bad either. Now, why is the stock going up? If we take a look at the news, here's what key metrics tell us about Evertec second quarter earnings. Let's take a look at, obviously, so the company reported some good earnings. I like Evertec for that reason. Here's how Evertec performed in the just reported quarter in terms of metrics. So its revenue payment service in Puerto Rico and Caribbean up 6.7% last year. Revenue in payment services for Latin America was up 91%. Excellent. Revenue merchant acquiring plus 9%. Revenue in business solution plus 9%. Revenue in corporate and others 16.8%. Well, shares returns 4% over the past months versus a ZAC S&P of minus 0.4. The stock currently has a ranking of number 3. The company is doing great. It's going great because the growth is there and they're international. So why don't we take a closer look? Let's take a closer look at this company because now in this kind of environment, you need companies that are small, that haven't done much of anything. Have they? Have they not much of anything? Let's take a look at the chart. If I look at the chart over the past year, let's see. So in the past 6 months, it's down 12%. Year to date, 14%. 1 year, then 10%. That's perfect. So the stock is not doing that great. It has been totally disregarded. Okay? So, and that's what you want. Remember, you want to buy what everybody else is selling. You want to sell what everybody else is buying. You want to be the first one. You don't want to be following a bunch of people like the minions, right? The minions are following and they're jumping the cliff. You don't want that. What you want is that you want to get there in a good stock that's making sense to you. How is that making sense? Let's take a look at the company itself. So we're gonna do profile, and let's take a look at profile of this company, and let's take a look at the annual report. All right. So, whoa, hold on. Why is this giving me now? Okay. So what is Evertec? I like the fact that it's international. You may want that. Now, lots of... so what do they do? Well, basically, our company... payment and collection, automatic teller machine, technology, business solutions. We transform our world in the technology of the possible. Evertec, align planning, protection, 3 benefits for your business. So what do they actually do? We are Evertec. So Evertec, it's a leader in transaction technologies and processing. First of all, 30 years of experience. Second, they're in 10 countries. It's a leading electronic transaction and technology company with headquarters in San Juan, Puerto Rico. The company operates in 26 countries, Latin and Caribbean. We own and operate the largest debit network in the Caribbean. So I know, it's not the US, but you know what? I like the fact that they are international. I like the fact that it's payments. I like the fact that they have been there for a long time. That is very important. Okay, so what do they offer? They offer payments acceptance, supply management, merchant management, manage IT, risk management, payment, automatic tellers, business. So you know what? They're everywhere, and that's good. You want to take a look at this company. That is a very interesting company. What else do we have of interest for you? Let's take a look at our portfolio. So Evertec is doing great at 1.17. Another one that's doing great at 1% change is Veradigm. Veradigm for year to date is down 7% and it's down 27% in 1 year. Okay. But it's up 1%. Is there news for me to go up 1%? Black Book ranks Veradigm Player Analytics the number one overall player analytics solution vendor. It's a leading provider of healthcare data and technology solution. You see, we want some more companies. Let's take a look at the financials. Again, financials, this is a billion-dollar company. I mean, why am I seeing only up to 2021? Balance sheet. That's interesting. I'm only seeing data as of 2021. We want to take a look at that. But let's see. Let's take a look at the profile. Let's take a look at the profile. Empowering our client with trusted data, insight, and solution to help reduce costs and improve health outcome of the patient that serves. So this is a healthcare play. Why not? Why not? About us. So let's see who they are. So they've been providing healthcare services for a long time. Some healthcare technology companies provide data for buyer, with some help turn the data into insight. Other healthcare companies organize focus on healthcare. We do it all. So it was born in 1986, integrated data and service company that combines data-driven clinical insight with actionable tools. Yeah, I know. It's not Intel. I know it's not Nvidia. So it's like, well, what is this little really company? What are they really doing? Well, they're helping you. They're helping you with lots of things. They're helping you with actual data. Some healthcare companies provides data for biopharma and health plans. So you have life and science, health plan and players, healthcare provider, the network, and insight. So they are very broadly. So what is that? They have real world and health data, cardiology and metabolic registries, real world evidence. They are very diversified. Take a look at this company. And again, like I always say, you want to really understand the company you're investing into. You want to make sure, and right now, with the fact that we have unemployment at 4.3%, what you want to do is that you want to actually make sure that you have the company that is diversified, that is small, that hasn't done well yet, and that is value. There's value to the company. So if I look at investors, I would like to know why I'm only seeing 2021. If I look at the financials and the SEC filing and annual, let's take a look at the annual report. And if you go to the annual report 2022, it's interesting that the company, about news and event, press release. No, they've got some news at 2024. Black Book ranks player analytics Nobel player, so they seem to be doing well. Highest client satisfaction to explore strategic alternative and reaffirm. Oh, be careful. Be careful. Veradigm to explore strategic alternatives. A leading announced that he has initiated a process to explore to maximize shareholder value. You know what that means, right? That means essentially they want to be taken over. And that could be a takeover play. See, that's the thing with small companies. They could be taken off. They could be taken over. And therefore, if it makes sense, gone. So, and that's been happening since May. They've been, now of course, no one is actually did anything. Veradigm enables a deeper understanding. So the company is looking for direction here. That could be an interesting play, quite frankly. So small company. And so I think these are the two stocks that I have for you today.